Hey, what's going on, everyone? This is Sawcruhteez Streamz, and today I'm your co-host, Socrates. I'm joined by Gabriel Harber for another live coaching session, and today will be an exciting session indeed because I will get the first opportunity to trade the newly developed Peterbolic SAR, which I have been working with Casey Bowman to put together, and after last night, I felt confident that it is ready to go. So today I will be very excited to share what that is, why I'm interested in it, and then I will be rolling up my sleeves and doing some live trading for the first time using it. So I expect there will be a lot for me to learn. That's why I like to zoom in and trade these lower time frame charts when I have an indicator that is maybe new to me or I need more experience trading it. Using it on a small time frame allows me to get a lot of experience in a very short amount of time, and that really will help me to think through some of the benefits and potential risks of using a system like this to trade. So with that being said, how's it going, Gabriel? Looking good today?
Oh, well, thank you. I've got a particularly shiny gleam to my beard, so I would have to say I'm looking pretty good as well. And I'm pretty stoked because our man, Peter Brandt, actually gave us the A-OK on using his name for the 3-day rule, Peterbolic Star, that you're going to be using today. I think that's pretty freaking awesome.
Absolutely. Both of us are big fans of his, so when I reached out to see if it'd be okay to use his name on the indicator, I was very hopeful that he would not tell me to go F myself, and I was also hopeful that we would get a response. So we got a response, and it was go ahead. So I'm very excited to have the stamp of approval from the man who put together the indicator himself.
And I want to ask the folks in chat real quick before we get started, is my audio okay? I had a few complaints over the last couple weeks that my audio was a little bit less than optimal. And I realized that the gain on this here microphone I'd been using, I think my daughter had got a hold of it and somehow turned the gain all the way to one level. So I adjusted it a little bit, put it more in the middle, and I want to see if you guys can hear me better. Just leave a comment and I will adjust it accordingly if you folks say it's not sounding too great.
Sounds good. And before diving in, we'll just give some shout outs. I see Leo Money has said hi to both of us. So, how are you doing, Leo? Floyd with some peace signs, right back at you. And Fabric King, a good evening to you. And rocket emojis, rocket emojis, rocket emojis. All right. And all right, let's go ahead and share my screen. I am hopeful that I'm not going.
Sorry to comment. Audio's good, but voice is pretty gay.
That's awesome. Okay, I want to make sure that, all right, I think this is set up how I want it. Perfect. And before getting into this, we want to just take a look at a chart with the Peterbolic SAR on there so that we can go ahead and cover exactly what it is and why it is used. Okay, so the...
And do you have, real quick, do you have your email address and stuff covered on BitMEX?
I do. So that should be covered up. And
because I can see it on my end. I'm just letting you know.
Okay, yeah, keeping my eye on the YouTube video, and that looks good.
Okay, cool. Just wanted to make sure.
All right, okay, so let's go ahead and look at what is the Peterbolic SAR. And what you guys can do if you want to just read it straight out of the book is Google Peter Brandt 3-day rule. So this was developed as a trailing stop loss. So right here, first result, you click on it, it's highlighted in red. And this is how he will exit positions preemptively if they do not reach the pattern target. So this is just developed as a way to trail stops, but I have noticed that it is so powerful it can actually be used as a full stop and reversal system. So let's see here. I was hoping we would have both of our faces on the screen, but it looks like it will just be you, so no big deal. All right, so the stop loss works as follows. You have to locate the extreme point of a trend, either the high of a bull trend or the low of a bear trend, and then you get a setup day when a market closes below the low of the high day. So that can be a little bit confusing to visualize. Let's pull up a chart. We see that this was the high of this move, this run up in Bitcoin. We had a high right here. So this yellow triangle illustrates the setup day because we closed below the low of this candle. Keep in mind it's not the open, it includes the wick. So a close below the low of this candle gives us a setup day, which is illustrated with a yellow triangle. Okay, so now that we can identify the setup day, we look for the trigger. The trigger takes place when the low of the setup day is penetrated. Now this one doesn't need to be a close. Right here we see that here's the low of the setup day. And right here we break it down, not on a closing basis, we just penetrate the low of the setup day. That gives us a trigger. And the trigger will get you out of long exposure if you're using this as a 3-day as a trailing stop loss system. And like I said, I've found this to be so powerful that it can be used to actually fully enter into a position in the other direction. So that's why I have labeled it the Peterbolic SAR. SAR stands for stop and reversal. And instead of just getting stopped out, you could go ahead and use this to enter the other side of the position. Didn't work out very well here. You would have ended up entering the short here at basically the bottom, but the risk reward is what is so attractive to me. And basically right here, we would be getting out of this short and entering long. So the short would be entered. We have a setup day here because we close above the high of this candle, which made the low. The lowest point in this move down was on this candle. So closing above the high of that candle gives us a setup, and then we get triggered when the high of this candle gets taken out. So that would trigger a full stop loss on the short position and a full entry in the long direction if you are using this as a full stop and reversal system. And then you would hold on until the next. And you will always be flipping the position if you are trading a stop and reversal system. So every time that you get signaled to exit, you fully enter into the other direction. Not seeing the best results here, but this was caught in a range, and that makes it very, very difficult to, it's harder to have profitable signals when you're stuck in a range, but even still, we do see some pretty nice signals coming in where the reward is looking a lot better than the risk. So let's just see what this signal is on currently. If we were using this system on the daily chart, it would have signaled a short at 98.88, and you would still be in that position. And let's see what we would need to get a setup day. Look how close we were yesterday. Here's the low of the move. Close above this would have given us a setup, and we didn't close above. Instead, we wicked above and closed below. So no setup. A close above 83.44 0.5 would give us the setup day. And if we broke the high of that, then it would trigger an exit from this short position. So hopefully I described that pretty well. What do you think, Gabriel? Does that all make sense?
That all makes sense. And I think that I don't think you mentioned yet exactly why Peter Brandt decided to develop this either, if you don't mind me sharing with folks that.
Go for it.
So he was noticing that Peter Brandt, of course, is the reason I like him so much is he's pretty much purely a chart pattern trader. You folks have heard me in the last few weeks, both on these shows and if you follow my shows I do daily on my YouTube channel, which shameless self-promotion will be in the description below on this video if you want to check it out. You've heard me talk a lot about how chart patterns have quickly become my favorite system to trade. The number one thing I look for anytime I open up a chart. And Peter Brandt is, of course, one of the gods of chart pattern trading. And he pointed out that he was noticing that the time from when a chart pattern would break out to the time where his target would be reached, let's say he's deep into the profit, he wouldn't actually have a place to put a stop loss if his stop loss was going, I should probably rephrase that. If his stop loss was placed once the pattern broke out, then once he's deep into the profit, he doesn't want to leave his stop loss back where it was originally when the pattern first broke out because he's risking a whole lot of his profit and he is relatively close to or like halfway to his target. So he needed to come up with a stop loss system that would trail the chart pattern breakout, but also allow him to make sure that he was capturing all the profit possible until it potentially reached whatever his target was. So that's why he came up with the 3-day rule so that he could trail a stop loss for chart patterns without having to exit the position manually if it hadn't reached the target yet.
Absolutely. Absolutely. And I guess before diving in, it looks like we are not on a, doesn't look like a position is going to be signaled here in the next few minutes, so there will be a couple things to go ahead and look at. In the meantime, let's just take a look at these last signals, see how they have been working out. We got a sell signal right in here, breaking that down, 82.39. Buy signal, 82.45, small loss, and then the buy did turn into a winning position, and you would have covered that right here on this red arrow. And I do want to make these arrows bigger. I apologize that they're small, but there are some issues that when we make those bigger, so bear with these smaller triangles. So here a short was entered, signaled. It wasn't entered because I wasn't here trading yet. And then we see a couple setup days that never confirmed with a trigger until down here, so short there and then long here. If I was trading this over the last couple hours, then I would be long from right in here and waiting for the next signal to come through. So those last couple moves are quite nice, those last few signals, so that's really good to see. And then the thing that I did want to compare is the reason why I put this indicator together is because I wanted to see how it compared to the parabolic SAR. You may have heard me mention before that the only trailing stop loss system that I think could hold a candle to the parabolic SAR is Peter Brandt's 3-day rule. So I wanted to get this on a chart so I could really, do some back testing there. And so far, I am really, really impressed with this thing. So let's just go ahead and put up the Lucid SAR and compare to how this has performed. And we see that we get a buy signal from the Peterbolic SAR right here. And notice how choppy the Lucid SAR is. You buy up here kind of at the top, and then you get it broken down here. If you're just trading the SAR as a stop and reversal system, you're buying the top, selling the bottom, and then finally you get a good entry here. Whereas the Peterbolic SAR signals this long right here at support, and then it doesn't get reversed. You have a couple setup days, but no trigger. A setup day, no trigger, and notice how the SARs get broken and get you out low and back in high. Here you get the setup day, but no trigger, so you're still holding on to that same long position. Setup day, no trigger, still holding on. And then right up here, we get the signal to exit. So one entry signal down here around 5,000 and one signal to exit up here around let's call it 10,690. Much, much better than the SARs performed, not only in terms of signaling an entry, but also trailing that stop loss. So this is the kind of thing that's getting me really excited about the potential of this being used as a system to trade opposed to just using it as a stop loss system. And in my last trading video, I did trade on the 1 minute chart because I wanted to make sure that I was getting, a good amount of entries signaled, and that did go, I think, a little bit too fast for some viewers. So I do want to back it up a little bit to the 2 minute, give us twice as much time, and it will be great to see if we're able to get into some positions. It would have been great if we started a little bit earlier, but that's not how it went. So hopefully we get a signal here on the horizon, and I will be very excited to go ahead and do a lot more back testing and implement this. Trying this out with the TD sequential makes a whole lot of sense, kind of like we'll trade the SAR sequential. If I replace that lucid SAR with the Peterbolic SAR, I'm very interested to see how the results are affected. So I'm going to go ahead and
if I may interrupt for just a second, some people are asking if you could close out the trading view pop-up on the right of your screen so that way they could see the chart a little bit better.
Okay. Let's see, is that okay? There we go.
There you go. Cool. Perfect.
Thanks for keeping an eye on that. So I guess here in the meantime, while we're waiting for a signal to occur, we will go ahead and look at some backtesting results that somebody actually shared with me for the SAR sequential, because I think it is pretty darn interesting, and we'll enjoy sharing this here real quickly. So shout out to Johan Duplessis, who put together an algorithm to do a very comprehensive back test of the SAR sequential, and he was there. One thing that he was interested in is how much I talk about in this show that I'm not doing this to try to make money. I'm doing this to try to learn and gain experience and gain just get better at executing. He was kind of curious. He says, "Well, man, this sure does seem like a profitable system. Why don't you think that that this can be used to profit?" And it absolutely is a profitable system and can be traded with the goal of profiting, but that just isn't what we're doing here, because we aren't really day traders. We are more interested in swing trading, that sort of thing. So that being said, it doesn't mean that that system is not going to be profitable on different time frames, and it's definitely interesting the results that he came up with. Here is the chart that he shared, which allows me to kind of confirm that the entries and exits are on point, and then these are the numbers that he got, which you guys may not be able to see. But what is interesting is, let's see here, if I can exit that, which I clearly can't on my Zoom. There we go. So what is very interesting is what he found out here is if you start with just 1,000 contracts and you start at the beginning of 2017 trading the 3 minute chart using the SAR sequential and never increasing the position size, you're only using 1,000 contracts, and as you make profit, you're just withdrawing for whatever the case may be. You're sticking with 1,000 contract exposure size. Since 1/1 of 2017, that would have been turned into 2.677 BTC, and that's using limit orders to enter and market orders to exit. And that's something that you could definitely gain 1,000 contracts worth of exposure with like $100 using 10-to-1 leverage on these lower time frames with the Parabolic SAR, basically is always inside of 10%. You would be very, very comfortable that you're not going to get liquidated using 10x leverage trading this system. So potentially you could have put in $100 and in a couple of years turn that into 2.677 Bitcoin, which...
Now you would have to be trading every moment of every day, right?
Correct. So that would be if you are always trading, and that is where potentially some bots are able to do something like that. But the caveat is what if you were to reinvest your earnings instead of trading all day every day? You are reinvesting your earnings and really compounding your interest. That would, I think, make a much bigger difference than the restrictions of the time. And then the other thing that he found was pretty similar results with the 4 hour. If you were trading the 4 hour, since that time period, what did he come up with? Let's see here. Well, it was a very similar results. I can't see where that is now, but this was the back test, and now I won't be able to get out of it again. So something to consider is that using it on different time frames and then seeing that similar profit is provided really paints the picture of why I'm not very interested in day trading, because I believe that similar results can be found with far less time commitment, and
Right.
that is the primary reason why I'm not super interested in day trading on a regular basis, and where I think the 4 hours is a pretty darn sweet spot where it allows me to take time away, but it also keeps me in a good amount of trades throughout the time period. So this is
Let me
go.
let me throw something in there real quick if I could. All you folks who are hearing this right now, I think one of the best ways to leverage, no pun intended, by the way, to leverage all this information that Socrates is dropping on you is, let's say you want to trade on BitMEX, but it is admittedly a complex website to use until you get the hang of it. Well, he's got a wonderful series of BitMEX tutorial videos that you can watch. They're going to teach you everything you need to know about using BitMEX. Then you can use something like the Sarc system to practice trading on BitMEX as well as trading the Sarc system itself. You do that for an hour or so every single day over the course of a couple of months. All of a sudden, you've got all the reps or batting practice in that you need. Then you can go to your preferred time frame, the 4 hour chart, the 1 hour chart, the 1 day chart, whatever it is, trade the Sarc, and you've got the benefit of knowing the ins and outs of the system and the benefit of knowing how BitMEX works very intimately now. So you're going to be very well equipped with a very simple trading system to profit over the long term. That's the important thing, is that there is no get rich quick scheme unless you accidentally manage to buy options on Boeing before the plane crash happened, which is the kind of thing that I accidentally I bought a $16 put option on Boeing before the crash happened. Anyways, that's besides the point, but there is really no get rich quick stuff. So you take that money, you invest it over the course of a couple of years, you expect that there's going to be some ups and some downs, but it's a minimal time investment to use the Sarc because it's an if-then proposition. If these factors and if these criterion are fulfilled, enter the position. If not, go ahead and ignore the markets until the next candle closes. And with that simple system and with the knowledge of BitMEX, you could easily make yourself, money you need for Christmas presents or the car repair or whatever it is that you're looking for.
I appreciate that input. Definitely take a look at the BitMEX tutorial. I think there is something there for everybody. It starts out with the most basic stuff from, order types and, the very, very introductory stuff. And by the end, I get into some, more advanced concepts that even if you are familiar with BitMEX, there will probably be some stuff there for you to learn in terms of there's some arbitrage and then the basis and using it, backwardation and extreme contango to identify major tops and bottoms. So definitely give that a look. And then also, if you do decide to sign up, I have affiliate links that will be in the description of every video. And my goal is to not, only get you guys to use my affiliate links, but get you to be profitable. Because if somebody signs up for an affiliate link and they deposit $100 or something and they lose it and then they go away, then that's not really very beneficial to either of us. Whereas if somebody is able to take a profitable strategy and put that to work actively trading and making money, then you're going to be, trading a lot more and increasing your account value. And that's going to be definitely best for me as the affiliate who would get paid off of based on how much you're trading and how much fees you are paying. So we'll see here if we may get a setup. We do have a very small candle here. I wonder if it made a new high. This high 82.67, this high 82.67. So we would have to close below this candle to get a setup. Now we do have a new high on this candle.
Could you go back over while we're waiting on some action to happen here on the 2-minute chart? I've got the Peterbolic SAR pulled up on my chart, and I'm just wondering for the people who might be pulling this up themselves, could you explain what the different arrows mean and what the different colors of the arrows mean once again?
Yeah, you got it. And were you able to find it by searching Peterbolic SAR?
I was able to find it by searching SAR testing A.
Okay, yep. So that is, I think we'll get the final version uploaded here very soon. And in the meantime, I will just show what it looks like here. If I can remove enough indicators to get it on my chart. Okay, so here, this is what I'm using is SAR testing A. That's still kind of the beta version. I think we've got the kinks ironed out, and we will be ready to publish the final version. But as it stands, until then, you can find this, and this is going to be available for free to anybody who is interested. So right now, if you search SAR testing, and then A version 00.3 is going to be the one to use, and go on over to Casey's profile and give him some likes for putting that together for us. So yeah, we will go over these colors really quickly. The yellow is the setup. The yellow is just think of it like a stoplight, where yellow, it's telling you, okay, time to be very cautious or pay very, very close attention. Sometimes you blow right through without it getting triggered, and sometimes you get the red or green light. So here, yellow is setup, red is trigger. So this trigger would be to exit longs that were entered here and enter a short. And then right here, we have a setup below the candle. So that illustrates that it would be a buy setup. And it doesn't get triggered, doesn't get triggered, doesn't get triggered, doesn't get triggered, finally gets triggered. So green is the buy trigger, and that will tell you to take profit from shorts up here and enter long on that trigger. So if we get a yellow and no red or green, we do nothing. If we get a yellow and then a red, we exit longs and enter shorts. If we get a yellow and then a green, we will exit shorts and enter longs. Ooh, here we go. All right, so this will be our setup day. We need to be paying close attention.
So the high candle is the candle that just printed the trading period before, that one right there. Yep. And because we now have a close, because we potentially have a close below that candle, if this candle closes there, that would be our setup day that has just been triggered.
Yep, and it looks like we are right on the horizon of getting that. So let me make sure I'm ready. Oh, geez, this doesn't have a 2-minute chart on here. This is going to make it tricky.
You should be able to type it into that little box there at the top left.
Little box at the top left. Oh, nice. Can I? 2. Not applicable. Shoot. That's going to make this awful tricky. Oh, I can just put up a chart on my other screen. No problem. Okay.
I say F you, BitMEX. Don't tell me it's not applicable.
This is very applicable. Okay. So now I've got my chart that I can look at, so I know where I am. So I can determine that this entry would be signaled if we break down this low. So I'm going to do stop limit.
No, and it is if the current candle trades anywhere below the prior candle, which is the setup candle, then we are getting out of that position and getting into a new one.
Yep. So we now have, this has been triggered. So we are going to go ahead and just enter an order right there. And I'm going, and market is moving. So we will do 82.60, 59.5 now. So it looks like this might be a little tough to get a fill, and I didn't have time to calculate my exact exposure, so I just entered a very small order to start, and now I can come back in and determine my risk by using the top of this here. Okay. So we use...
What are the purple arrows?
That may be just a different setting on the... that would be what the yellow is changed to now.
Okay. Because I have on the SAR testing A that I have pulled up, I've got yellow and purple candles on each of the same candles.
Interesting. And we might have to take a look at that. Okay. I've got a lot going on, so just give me a second.
Okay, gotcha.
So here's where it gets tricky. Here's where it really comes to life is, let's see here, where the market's moving away from you and you got this signal, and now it's up to me basically how far I want to chase this, or where do I say that I missed out. And I really like to try to sell on a bounce here. So we're going to do 82.54. Come on. 8254. Jeez Louise, what is going on today? 8254. And that is a limit, post only. And we are sellers. Okay, so now we've got a couple orders up that is well within reason based on where my stop loss would be, and market is moving. It is moving away. So that's a tricky spot where in these lower time frames really can't be using market orders. It really destroys the profit and can definitely turn a profitable system into a unprofitable system. So that's where we have to be using limit orders. And in this situation right here, where this thing just moves straight down and then the next candle gets no bounce at all, it is really hard to be getting filled on these limit orders. So this is where I am going to be learning a lot myself. Should I be entering on this candle? I would have definitely entered if we were in this candle's range. What I'm inclined to think is that I need to get positioned in the candle that is the trigger. So if I don't get positioned on this candle, I can get positioned on the following candle if it's inside this candle's range. This is the price that I want, is on this candle. Now that it's moving away pretty darn rapidly, I am not interested in chasing it down to here, even though, I'll just leave it at that. I'm not interested in really chasing it down beyond 82.51.5, so I will adjust to 51.5. So these are going to be my orders that I will be comfortable as long as we don't get a signal on the other side, which we very well may. I will be comfortable selling at these prices, and this is where I will use really low time frame to help me get an idea for if I can get filled at a better price. And this does sure look like on this time frame that a little bounce could be coming back up to right where I'm set up to sell. So I'm going to go ahead and leave those orders as they are. If I do not get filled, then I will just be okay with missing out. Oh, that's the 3 minute. Interesting, the 3 minute has a signal as well. And that's something that's very, very, very important, is that you have to be okay missing out. If we get a signal and we're not able to get enter, this is going to happen often, and it is frustrating when markets run away. You get a signal, and now you would be real in profit. If we would have gotten filled right when that signal came in, we would really be already, looking pretty darn good. Instead, we're just stuck here on the sidelines, and that's where a individual trader, two people might have much different results trading the same system, because one may be much more patient and much more picky than another who is just going to make sure that they get entered on every single signal. And this is another example of why I really prefer higher time frames. When I'm trading these lower time frames, you're basically just competing against these bots that as soon as the price moves, they're able to instantly move themselves. And now you saw me trying to come in here and fiddle around with these orders. I'm going to have a very, very hard time competing against these bots who are trying to get fills at the right prices. Whereas if this is like a 4-hour chart and we're getting a signal on the 4-hour chart, well, I'm going to have a lot of time. I'm going to have 4 hours to get a order filled in the candle that signaled. So I'm like never going to miss out on a signal that occurs on the 4-hour chart. Whereas on the 3-minute, absolutely going to miss out fairly regularly. So yeah, if we do get back up to my level, the issue is going to be that it's probably going to be a buy signal unless we can do it real quick. So this right here would be a setup. We've got the lowest part of the move down here is right here. So if we close above 82.45, we've got a setup. And then if we take out that high, now we've got a buy trigger. So this is a good example of where if we get filled on this candle, it would be great, but on the very next candle, we couldn't. So we did just have one order trigger and fill.
Are you still using the Heikin-Ashi candles as well?
That's something that I have been experimenting with. The Heikin-Ashi candles changes significantly that 3-day stop, and therefore I need to do a lot more testing to see basically if that is preferable for using this Peterbolic SAR. So what I'm going to have to do is enter my stop loss right above this candle, because that would be the trigger if we break above the high of this candle, 82.55.5. Stop market. Okay, position. So we've got stop market 82.55.5. Close on trigger and set buy stop. So notice this risk that I'm taking on right now is just basically nothing. I entered at 82.53 and my stop would be triggered at 82.55.5. And because we see that this did get the yellow, and if we just break above the high of this at any time, that triggers the buy. So not only would I be wanting to stop out of this short position that I just got filled on, because again, I got filled at the price of this candle. It doesn't have to be in this candle. It just needs to be around the price, because that's how the risk reward is defined. If I'm running away with it, now I'm really taking on a lot more risk. Whereas here we see that my risk is almost nothing. It's like 2 or 3 ticks. Let's see here. So we entered at 82.53. And our stop is 82.55.5. So that is a very, very, very little risk associated with that. And we can even go ahead and put in a order to buy if the price gets at that. So we will do stop limit, no close on trigger. We'll do another 5,000.
And I see a couple people asking for clarification about so if it skips a candle, it's no good. Is it okay to get filled at the same price later on as long as the price comes back to you? And I think that you have said on a couple of occasions when you've spoken to me that basically as long as you're still getting that same price that you wanted to get and your signal is still intact, then you are fine.
Exactly. So that's where I have a lot to learn here myself, and I will be maybe what I say tomorrow isn't the same thing that I say today, but in general, for me, it's all about risk reward. And if I am entering at the price, it is more important than the proximity of, like, if we have a couple candles that run away, now I'm taking on too much risk entering this position. Whereas if I can get an entry filled at this price while we're still on a sell signal, then it's the same thing if I get filled on this candle or this candle. What matters to me is the price. It's not necessarily how far we have, how many candles after the signal occurred. So that's where if I'm entering in on this candle's body, I'm getting the same price as I would have if I got filled in here, and therefore the risk reward is going to be the same. And I don't care too much if it's 4 candles after, as long as we still have the red arrow. So right here what we've got is if this gets just 1 tick higher, we're going to be stopped out of our short, and then we will have a limit order triggered to go ahead and enter us long. And let's take a look at how the orders are set up. So we have a let's see, that might be the wrong amount. Yes, thank heavens I saw that. Okay, so we've got a market order at 8255.5 to exit, because if I get a signal to exit, I'm just taking a market. I can't not get filled on a stop loss, because then I could get wrecked potentially. So market order to exit, and then to enter long, I have a limit order. It's a stop limit post only. So I will be only entering if my limit order gets filled, and then I may look to move it up if it blows right by, as long as it's still in that current candles period. And that's what a stop and reversal system is that if you get stopped, you reverse. And that is, again, what SAR stands for. So notice just how hard this thing is trying to trigger my stop, but it's not so far having any success. I mean, it's just amazing. And this is something that I've seen time and time and time again as I have started to use this, is how often you will get the setup and then get within a tick of getting a trigger and it doesn't occur. Let's just kind of go back. Now that we've got our order set, we can look at this. Setup within a tick, doesn't occur. Setup within a tick, doesn't occur. So when you're seeing a stop loss this close to my entry, it may look very, very weird, and like that's sure not going to work to have a stop loss in crypto only $1.50 away from your entry. Whereas I would argue that it works enough that it is a very, very appealing system. That's what's so exciting to me, is how little risk you can take on some of these entries, and then if the market moves in your favor, you have a lot of rewards to potentially make. So let's just go ahead and definitely take a look at the order book. We do see a nice sell order, so I like that, and it's pretty static. It's not coming in and out, so I do like seeing significant resistance here, starting to eat away a little bit at support. Now support's having some orders that are not static, so it will be
the
interesting.
problem with looking at that on BitMEX, as far as I can tell, though, is that these iceberg orders really kind of pull the wool over your eyes when it comes to figuring out what's actually going on with the order book.
It does, but not necessarily, because you can identify those if you're watching closely enough. Like, for example, what if a 250,000, and when he says iceberg order, I believe you're referring to the blind orders. Is that what you're referring to?
The orders that basically they're not required to put their entire order amount onto the order book, so they can just keep shipping small amounts of their order and putting it on the book when the previous amount gets exhausted.
Okay, and I must be thinking about something else. I may not be familiar with that order type myself. I was thinking about the blind orders. You can have a blind order on BitMEX where you enter, say, $1 million to buy right here, but have it be blind so that nobody can see it. That's what I was thinking about, which you can start to identify. It sounds like I need to give that some more thought in terms of the iceberg orders and how that affects my order book watching, because I have definitely noticed that is a really good way to get your finger on the pulse of the market, and I don't feel like
let me read this real quick, because it's actually the BitMEX FAQ is actually talking about you.
About me? What?
An iceberg order is a hidden order where a part of the order is displayed on the public order book. Since savvy traders, parentheses like Socrates, are able to identify hidden orders, some traders prefer to use this order type in an attempt to be indistinguishable from traders continuously refilling their order.
Interesting. Yeah, so there you have it. Because I definitely
You savvy trader, you
pick up on the blind orders, but I'll have to give thought to the iceberg orders. And I used to watch the order book all day, every day, and I don't do that really at all anymore. So this is sure some sweet action that we're seeing here, though. Being able to a couple, just things to learn is that as price was running away from me, I had a pretty clearly defined approach of where I was willing to chase it to. I was chasing it down to here. And then once this candle failed to kind of get any sort of bounce up in here, I decided that I'm not going to chase this candle. And instead, I'm going to, I used a really low time frame, like a 5-second chart, to get a feel for if a bounce from that area would be reasonable, which it did really look like it to me. We had horizontal support, big sell-off. So I was feeling like that order was going to be, that this was not a place where I really wanted to chase. We're at horizontal support after a big sell-off. That does seem like a reasonable area to get a bounce. So then I left my orders and I looked at basically the support and resistance on the 5-second and use that to determine where I wanted my orders to be at. And I was able to get both those orders filled right in here. And this is where I will be learning a lot in terms of, should I be taking a little bit of profit? At what point? This doesn't have any sort of partial profit take built into it, and that's something that I'm generally very uncomfortable with. I really like taking partial profit. If the position is moving in my favor, then I want to look for areas to take partial profit, whereas this system doesn't have that. So as I get more experience trading this, I'll get a better feel for if that is something that I will be able to add into this. And one thing I did want to clarify, I shared the backtesting results for the SAR sequential, and there was one difference there that is different from how I did it, which is all profit was taken on the first 9. So the way that he did that backtest was, if you get a 9, you fully exit the position. And for me, I think that definitely goes a long way to take away from how much more could have been made if you are letting positions move in your favor with half of the position that's working for you. That is much better in my experience in taking full profit on the first 9, and we maybe even got into that a little on the previous time I was trading. So that is good to have a good back test, and I also like it to be kind of conservative. I kind of like it that it's taking full profit on that first 9, because it tells me that I would have reason to believe that there are improvements to be made. And if you are just thinking you're going to do the exact thing you do on a back test and get those results, it's just not going to happen, because like we saw in here, often you're not going to get filled, and often when you don't get filled, it's like the best time to have been getting filled. Like right here, we got signaled up in here. I was starting to enter orders up in here. We don't get filled, and it was the best time for that fill to come. So if you are looking at back tests, know that you're not going to get those same results. And if you can find a way to kind of be a little bit conservative with your back test, then it will at least make me feel more comfortable that somewhere in that realm is somewhat achievable.
And let me throw in my 2 cents here, if I could. When I've traded the SAR sequential in the past, I didn't even realize I was trading the SAR sequential. You and I had talked about how the parabolic stop and reverse points could be very complementary to the TD sequential system. What I had been doing was I had actually been keeping half of my stop loss underneath of the parabolic stop and reverse point, and half of my stop loss using the system that Tone Bays teaches with his TD sequential workshops, which obviously there's no time to get into the intricacies of that right now. But I bring that up to say that I think there are definitely some variations that could be used and potentially improve upon the naked sequential system by adjusting the way that you take profit, particularly like you had mentioned, once a 9 is reached. Maybe not always the best idea to take full profit at that point, maybe take a partial profit.
Yep. And seeing some questions. Growth Punk says, but your fees are eating you up. And Satoshi Nakafomo, that's a great name. Yes, can we talk about how much the fees are? And this is why I trade on BitMEX. The fees aren't eating me up. I'm actually profiting on the fees. So we see right now realized P&L is 0.001 BTC. So I am, and that's realized because it's a fee. I haven't exited any of this position. I entered 5,000 short and I'm still 5,000 short, yet I'm up money due to the fees. And that is why I love BitMEX, and it only would do this type of thing on BitMEX, because when I enter limit orders, I'm getting paid to provide liquidity. So if I am able to use limit orders, I am going to be profitable on fees, and it's actually going to add to my returns. So that's something that's very important to understand. The other thing that's important to understand is the funding rates. It looks like longs are getting paid 0.0091%, but that doesn't come through for 6 hours. So I'm not going to have any have to worry about that for 6 hours. If I was short and this was in like 1 minute, then absolutely I would be getting hit with this fee. But for now, I'm not paying any funding rate. I've got 6 hours, and then I'm also getting paid to provide liquidity. When I enter a limit order, I am making money. So fees are doing the opposite of eating me alive. And let's see what's happening.
And it's also very important to point out as well, or just not even point out, but just to remind folks that that works fine and dandy for when you're entering a position, because you put your limit order in. If it gets filled, then you just made money with the fee and you have your position. If it goes past you, then you just sit this one out, no big deal. But when it comes to a stop loss, you have to have your stop trigger. So the way that I like to do it, and this comes from being taught by Socrates, is that I like to have a stop limit order on the books, and then a little bit lower or higher, depending on if it's a short or a long position that I'm in, I have a stop market order. And what that does and also you have to click the option that says to close on trigger. So that way you're never entering a new position. What it does is it allows you an opportunity to have your stop loss triggered and fill as a limit order. So you're getting paid to exit your position, versus having to pay the taker fee to exit your position. So that way, let's say that your stop loss is at $5, and if it goes down to $4.90, your market stop would be triggered. So if it goes to $5 and your stop limit order gets filled, you just got paid to exit your position. And when it gets down to $4.90, that order just cancels because it has close on trigger clicked. And I think it's very important that you always have 2 stop loss orders in as well, because there's just no damn reason not to have 2 stop loss orders put in.
Yep, and that's something that I could definitely add. I definitely agree with that approach, and I've kind of drawn these lines that maybe this red is a stop limit order and blue would be a stop market order. That's definitely something that it makes a lot of sense for the reasons that Gabriel mentioned. And right here, where I was looking at only having the stop loss be like $1.50 away from my entry, that would be no risk really at all, but the real risk there would be the stop market order. There I would have to pay 0.2% or so in a fee, and that would be the real like 80% of the loss. If I did get stopped out here, 80% of the loss would be if I had to take a market order. And like Gabriel said, I could definitely be entering in multiple stop losses, and probably should be. But as it stands, this is my first time trading this, and just having my order to go ahead and go long, like it would be too much for me to think about right now. If like my stop limit gets blown through and my for the exit, and then it also for my entry, so now I've got to worry about exiting when I really want to be worried about entering. So I'm kind of inclined to think, there is good reasons to just use a market order straight up. If you're trading a full stop and reversal system, then you want to be ready to reverse the position, opposed to being concerned about exiting when the stop was signaled. So that's something that I would prefer to do that, but I'm not sure if I'll be able to handle it, especially my first time or two trading this system. And it looks like...
Fine, we'll let you off the hook.
Looks like we got a tip from Frank Ybarra, who says, I'm a professional video editor working in marketing, looking to collaborate. I can take your streams to the next level. Contact me. Well, that's a very generous offer, and thank you very much for the tip. I will absolutely keep that in mind. Looking for questions. Hi, so is not good to leverage? Haroon Naik asks. Go ahead and definitely do not. It's not good to use leverage if you don't fully understand what you're doing. And if you don't fully understand what you're doing, go over to the BitMEX tutorial series where there's one episode, I think episode 3, dedicated specifically to leverage, which talks about why I use it. And where most people go wrong with leverage is they use it as a primary motivation of increasing their exposure. Maybe they've got $500 to trade and they want to enter into a $5,000 position, so they go leverage their full account and will never win in the long run doing that. Why I use leverage is to decrease my exposure to the exchanges. The more, if I'm using leverage, it means I need less money on deposit in margin. And if I need less money in deposit on margin, then I have less risk exposed to the exchange. I'm still only entering into positions that will maximum risk about 2% of my bankroll, but I am absolutely using leverage with the idea of decreasing exposures to exchange and also basically, I'll continue just saying that if I am day trading, if I'm looking to trade these lower time frames, then definitely am looking to use some leverage, because it's really, really insignificant, the moves, if no leverage is being used. So if you don't understand it, don't use it. But it doesn't mean you should never try to understand it, because there are a lot of good reasons why traders will use leverage. And
when you first start, don't be ashamed of either using a test account on BitMEX, which they have paper trading accounts, or use something like $1 that you're risking and leverage it times 10. So you're only risking $1, so you can start to get an idea for what leverage feels like, how your position moves. Don't, even if you think you understand it, because this comes from somebody who has accidentally I fat fingered so many trades. Saul, how many times did you get like a Telegram message from me in the middle of the night where I'm just like, fuck, what did I just do? Like, I need you to help me. Like, I don't know what I just did. Like, it's bound to happen when you first start trading. You can't avoid it. Making mistakes is part of the process, but you can mitigate how significant those mistakes are by limiting the capital that you're putting on the line when you first start.
Absolutely, couldn't agree more. And beyond, after doing the test net, just throw on a couple bucks, just like a few dollars onto exchange. And when you're using real money, there will be some differences from the test net, but there's no need to start, risking any sort of significant amount of money until you are very, very comfortable with everything. So we do see that everything worked out just how it should have, in terms of we got this buy trigger right here as soon as we broke through the high of these candles here. And as soon as that happened, I instantly got out of my short exposure, because I had a market order set right here. So as soon as that green triangle printed, I was out of my position. And now I am looking to go ahead and enter into the long direction, because now we have a long signaled. Prices again moving away, making it very tricky to get filled. And I'm comfortable leaving my order where it is. I don't really think that I want to chase it at this point. And if I do miss out, then that is quite all right. And this is where I will definitely be learning myself. I wanted to reach for the TD sequential to see, are we on like a 2 above a 1? Because if that's the case, I may be feeling more comfortable chasing it. But the reality is that I'm wanting to stick as closely as I can to this system and how it is set up. And if it means I miss out, like right here, I had a stop limit order also triggered. Let's go ahead and go back to... So active orders has now been triggered at 8256.5, but the market blew right through me. We basically just went, I got that entered as soon as I could because it was before the price got here. I already had this order on the books, so it was basically one of the first orders to trigger immediately, even faster than the bots because it was instant. It was already there, and still I got left behind on this, or so it appears right now, because we just shot right through that area where my buy was signaled. And this is where, when we are not in a position, we just be patient and we wait. And if we do get a setup, then great. But if we were still in our short, we couldn't just be waiting. That's where I will always, I have the market order, because you can't wait if you're not filled on a stop loss. But if you are not filled on an entry signal, absolutely, it's very, very important to just be very patient and wait. So that is what we will do. And it looks like we already have been going on for about an hour, so it's probably good that I don't get...
Got a couple more questions, if you don't mind me throwing them to you.
Go for it.
So Hassan B-Man says, can we do stop price and limit price at the same level? And to that, I would say it depends on what you mean. When you enter a stop limit order on BitMEX, it's going to ask you for the stop price, so the price at which you'll officially trigger your stop loss, and then also the limit price, which is the price that you're seeking to get. And those can be the same price. But if you're talking about the two separate orders, the stop limit order and the stop market order, you'll always need to make the stop market order a little bit higher or a little bit lower, depending on if you're in a short or a long, so that it would be the stop that gets triggered second, not the one that gets triggered first. So by definition, it would have to be a different price.
Yep, and just to clarify, yeah, so see, if we click on stop limit and we click on like a current price, he may be asking about the current price. If we were to do a limit order where, say, we're selling against the current price, that will execute as a market order. And it would, why people would do that is to just make sure that they don't get a much worse price. Sometimes if you enter a market order, there's slippage, but if you enter a limit order at the current price, if I entered a limit order to sell this or a limit order to buy that, then it would execute as a market order, and it would ensure that if the price just blew right through, like say you had $2 million that you were wanting to buy, you could enter a limit order right here at 82.64. You would market buy all of this, and then the remainder would be put as the limit order, which if other people sold into you would get filled. So I'm just going to go ahead and cancel this since we're already over an hour. I am not needing to enter a new position.
If you click post only, that'll make sure that your order never gets executed against the market and you miss out on the fee. Yep.
Absolutely very important. If you're entering a stop limit order, post only needs to be checked. And yeah, it looks like we did pick a kind of time of chop to go ahead and trade. Since we have been on here, we had to wait for a signal to come through. We got that signal here. We got what looked like it was going to be a sweet fill. Then price failed to break down this low. And then we got this buy signal where it just happened a little bit. The market moved too fast for me to get filled. And now it looks like it maybe came back down there and now is ready to kind of make another leg up, but I will be missing out on that because my order did not get filled and I was not interested in chasing this candle. And that's why I do this, why I like trading on lower time frames, because it's really going to get me thinking about these things of, is it should I be considering entering on a candle like this or a candle like this? Should I consider using the TD sequential to help confirm entries and then also give me a way to partial profit take along the way? Like right here, when the price was right here, you remember me saying that, man, I sure don't really feel great about not having a partial profit taking strategy, and getting some experience trading this system is really already got me thinking about a number of ways that I can potentially make some tweaks that'll make a big difference. And last thing to just cover is that when you do look back and potentially see a lot of good signals, you got to keep in mind how hard it would be to get filled in some of these situations. And if you are getting a good signal, but you're not able to get filled, it doesn't really do a whole lot for you. Notice here, when you get a signal that occurs on dojis, it's generally a lot of buying and selling at those prices so you can get filled. Here we got the signal, and then these candles came right back up into this candle's range, so we had plenty of time. We would have absolutely got filled there. When you see something like this, a signal, and then just, boom, no dojis, a marubozu followed by a marubozu, and then a sharp pullback real quick that potentially, if we were willing to chase into this candle's range, we would have orders set and been able to get that. But that's something I'm not willing to do at this point. I'm wanting to enter in the price of the candle that provides the signal. So again, this will be called the Peterbolic SAR, and we should have a final version here very soon. And in the meantime, if you come in and you do SAR testing, version 0.003 is the one I'm using. Already got a bunch of likes. That's awesome. Thank you guys very much. I appreciate that, and I'm sure that Casey does as well. So give that a look, and that being said, I will go ahead and stop share. And
couple more questions here, if I could throw them your way before we close out.
Great.
So I think it's, and I'm going to butcher this name, Vidlek Johansson says, does this work best on the 2 minutes or only the 2 minute chart? You can use this on any time frame. So there is no restriction on where you can use this, whatever time frame you're comfortable with. Crypto Goon asks,
and let me, I'll elaborate on that real quick just by pulling up a chart to show.
Actually, if I could, there's a question about what the 4 hour chart looks like right now with that indicator. So you could kill two birds with one stone if you look at the 4 hour chart and give that answer.
Okay. And this is where we wouldn't expect it to be working too well as it's been going sideways. It's going to be, tricky. There's going to be a lot of signals coming in and out, and generally they will occur at the worst prices when you're in a range, and that's exactly what happens here. So what is interesting is that we do have a long, and then we had a setup occur right here, and that's actually why I have this green line drawn right here, is because that would be the trigger on the 4 hour chart. Notice how the highest high of the move was this candle here. Close below the low occurred on this candle. This candle wicked below, didn't close below. Close below right here. And now if we take out that low, that would trigger a sell. And that's something that I'll be paying close attention to. So let's just go ahead and zoom out and get a feel for how this is working in a little bit better environment. I think we went over at the beginning, comparing to the SAR, that you got a buy signal on the daily here around 5,000 that you would have held on to all the way up to about 10,800. And then you would be short right now from about 10,200. In general, the indicators are going to work better on higher time frames. So I definitely expect it to be really powerful on even a 2 minute, but the more we zoom out, the more I would expect this to really work, that much better. And just notice how it's capturing these swings. That's what I'm looking for, is capturing these big moves where you're shorting up here around 62, covering here at 42, and then getting back short here, covering here very, very close to the bottom. Look at how close the absolute bottom occurred right here. And then you got an entry signal just, let's see here, it would have been at 35.90. And the bottom was 31.32, so that's pretty darn sweet. Let's just take a look at the last big parabolic move. We got a buy signal here at 65. Oh, is that right? Okay, yep, sorry about that. Okay, so we got a buy signal here at 65 that you held on to all the way up to 16,800. So that is absolutely beautiful. Look at how it captures. I mean, gets you in so close to the bottom and then gets you out so close to the top. And when you do have these losing positions right here, you shorted near the bottom, but you short 63.68 and then you cover 66.32, and then you go, so the risk is always very small, and the reward when things go in your favor is huge. So not only would you have gotten out of Bitcoin in 2017 at 16,700 using this method, you also would have gotten short at 16,700. So absolutely really excited about using this on multiple time frames and seeing how it stacks up against the parabolic SAR. My preliminary backtesting and research has made me think that it could be significantly more powerful, and so that's where I'm really excited to continue getting some experience, and I absolutely will be using it on low time frames because this is something I need experience with. I'm brand new to trading it, and I will be practicing what I preach in terms of using a low time frame to really gain a lot of experience buying and selling, and seeing what the real benefits are to using it and what are the real risks, and how maybe it can be combined with another one of my favorite indicators to make it that much better. So real excited. Any other questions that you're seeing?
No, nothing else that I'm seeing here.
All right, it sounds good.
Oh, actually, one more. So would this work as a simple buy-sell system in traditional markets as well? Just popped up.
Absolutely, and that's what it was developed for. Actually, Peter Brandt developed this for trading in patterns, and he a long time ago, like back in the 70s or so, and trading in traditional markets is absolutely how this thing was developed. So let's take a look at how it's done on this last move on gold. We had some choppy stuff happen here, and that's just what you expect. You just have to take those lumps when the market is choppy. The longer it stays choppy, the more you expect a big move to follow. So let's see here. We got a buy around 1285, sell around 1327, buy 1338, sell, buy, and another buy right here. So this is currently on a sell that is looking like setup has occurred, and if we break above 1505, we would get a buy trigger. So let's go ahead and just zoom this out to the weekly. That's definitely not looking as good as I was wanting to see, and that's where a higher time frame is definitely going to be a lot more helpful. And we do see, this is the action that I like seeing. When you get a swing like this, you got the buy here right before it happens, and the sell. I mean, look at that. That is just beautiful.
Do you have the chart pulled up right now?
I guess I do, but I don't have it on screen share, huh? So let's see here. We'll just show, and anybody can look for themselves. Indicators out there. So go ahead and try it out on different time frames and different markets. And right here, we're just looking at the weekly gold, getting you in right around here, and getting you out up here, capturing that full swing, and then we will be, if it does continue moving up from here, we'll get another buy signal here very close to, let's see here, it could happen very soon. This is the low. If we take out that and close above and then break it, then we would have a buy trigger. So this is what I love seeing right here is you got a swing and you captured like 90% of it, basically, maybe even a little bit more. So absolutely try it out on different markets. When the market is choppy, you're going to get these signals that are, not great, but the risk, that's what you want to pay attention to, is the risk versus the reward. The reward, big, risk small. Okay. So I appreciate you keeping an eye on the live chat. That's a big help, and I appreciate kind words. Self Picks says great stream and valuable info. Thank you. I appreciate that very much. And so yeah, all being said, it is time to go ahead and call it a day. Thank you very much, Gabriel, for joining. It's been another great show. Definitely will look forward to next week when you'll be back in the trenches yourself, and hopefully you got some value out of this along with some of the viewers.
Absolutely. Thank you all for watching. I appreciate it.